let me repeat the question. So it's easier for you to understand properly because at the end of the day, questions like this are what determines if you're going to be successful. Do you understand? Everybody can be
Yeah,
successful trading,
yeah,
but success can come in two ways. Either through the experience of success, which is very difficult, very, very difficult. Most of the time, the experience is not even, with money. You end up losing a lot of money when you're experiencing life. Or secondly, you don't get the experience, but you get very rich. That can happen.
yeah,
That can happen it can happen in any time, but at the end of the day, sometimes it doesn't really last. It happens, but it doesn't really last. I'm giving you the honest truth. But at the same time, what the question I'm about to ask you is based on a personal decision, which either you answer it consciously, like what we're about to do now, or you're going to answer it subconsciously. That is after you have subconsciously picked one and you end up experiencing it. So let me repeat the question again.
uh, yeah,
Are you going to make money, going to get a profit account, or are you going to learn from the experience? Because you can learn and end up losing the account without making any money, which makes you want to get another profit, which you might end up losing. But you will keep learning the experience, which increases your chances of getting better when you go live. So it's going to happen either way because you've already gotten the profit account. But the
yeah,
main point now is, which one are you prepared for? Are you going to make money by any means necessary, neglecting some certain things, using some certain crazy lot size, having so much faith? Or are you going to learn from the experience, trying to stay disciplined to some certain group of rules, trying to look for a certain pattern in particular, being patient, taking your time, not rushing it? That can get you money very fast. But if you go there to execute, to learn, that can get you to lose the account, but you're going to learn from your own experience. It's going to be your own experience. It's something that only you can explain because you're going to be the one who would experience it. Do you understand? So I'm not against you getting a profit, but this might not be the profit you make your money for, you know? But this might
yeah.
be the profit you go big, you make serious money for. But are you sure you're ready in case it goes south?
Yeah, maybe let me say something about that one. My intention is to buy a proper film. It just some time to transfer my knowledge that I've been learned from you practically, so that I can plant in my subconscious minds what have been taught to me to I mean to go live. I don't know how can I say this one. Let's say proper film account, and my target is just to risk 50 USD per day, just to for, I don't know how can I say this. Very very small risky on trading. Also, just not rushing to pull to execute a trade, just to prepare my plan and to wait for the price to reach my point of interest. Once it reach there, and mostly I will trade during New York session, starting for my own time here. I think it's almost 3 p.m. New York session open, then I will check if for my plan if met or not. If not met, I have to wait until my plan is okay. If it is not okay for that day, I cannot trade. That is my plan at all. Not to
Okay.
rush every trade, just yeah, thing like that one.
All right. So what we will do is this. What we will do is that um I'm going to refresh your memory on some certain
Yeah.
pattern on smart money concepts that you should be aware of, that you're going to use. Why I'm doing this is because you have to stick to what you know. Do you understand?
Yeah.
Right now, I'm trading my own personal account. I'm trading 100K profit. I've been trying to
Yeah.
pass phase one. I'm still on phase one. I had to travel, so I did not trade that a few months ago. So coming back to trading is very difficult for me right now because I have a lot of events going on. But I'm still on phase one. Do you understand? And I'm
Yeah.
okay with this. I'm trying to stay calm, stick to my rules, and stay as possible in control. As much as possible, stay in control. Do you understand? And at the same time, I'm trying to run the
Yeah.
platform, and that is trying to also mentor you. All this, I'm able to handle this because I have already made peace with myself that I'm going to do this. Do you understand? And
Yeah.
I'm already positioned in a place where I'm going to make it because I have enough experience to go through it. Do you understand? I'm not looking for the
Yeah.
experience anymore. But I can't say the same for you who is going live for the first time on a Profim account. Do you understand me?
Yeah.
So why
Yeah.
I'm
I
telling you
understand.
this is because on our first mentorship, we talked about trading plan. We talked about, some of the factors you have to understand to be successful in trade. I want you to go and look into that, how to create a trading
I
plan.
rem-
I also posted it on
yeah.
YouTube. I might post this one too on YouTube so it can help you when you maybe face challenges and you need to go higher. Just come back, watch the recording again. I'll post this particular one on YouTube. So you can also locate it too. I'll use, some tags that would identify you. So you can be able to watch it when you need to refresh your memory. Because I will show you some very serious patterns that would help you.
Yeah.
I will show you those patterns live too on the market here. This is NZD USD 1 hour. So you can also look at
Yeah.
them because I've already taught you a lot about market structure and I've
Yeah.
taught you about strong highs and weak lows. Those are things you should be very, very conscious about. Do you understand?
Yeah. Yeah.
Once you understand that aspect, you don't have to look for any other thing. You just have to pay attention to the pattern you're looking for. Once you understand market
Yeah.
structure, once you understand the internal structure and the major trend, you just have to pay attention to what? The pattern you're looking for. Now, in terms of pattern, this pattern is one of them. Okay. And then,
Confirm the entry.
can you see my screen?
Yeah. I see. I see.
Can you see the pattern, the first pattern I just draw? Okay, let me
Yeah.
make it more let me make it more moderate. You can see the screen, right?
Yeah.
Okay. So you see the pattern I just draw on the screen.
Yeah. Yeah. Yeah.
You know what that is?
Yeah, that is confirmed the entry. Just after change of character, then the price have to come back.
Nice,
After
nice,
come back,
nice. So from what I've taught you and from what you understand from market structure, this is always happening where market is moving in a new direction. Okay, so it
yeah,
has to be
yeah,
coming from a bearish trend. And then this
yeah,
happens when price is going to a bullish direction, right?
yeah, yeah, yeah,
So finding this, basically, this particular pattern I just show you, once you look for that model, you're able to understand whatever is going to happen next. Because this particular
yeah,
model puts you in a position where you either catch this key level, as you can see, price touches here, or you catch this key level. So you're paying attention to this point, or you're paying attention to this point for a re-entry. As you can see, once you look for this pattern, understanding what happens next is not really that difficult. You just have to find a break of structure and then look for where you find your demand zone. Of course, do you remember what I told you about what happens within this point, which is the internal structures?
Yeah.
So you're going to be using that. That is what they call liquidity. Okay, the internal structure is going to be liquidity within this range.
Okay.
Do you understand? So this could be, we could put it this way, clearing out liquidity, right? And then we put this way, break of structure. What does that look like? The same pattern we have here. Do you understand me?
Yeah.
That creates
Yeah,
the
I
same, that
understand.
this is the metrics of market structure. Once you can find this, you can always know what is going on here. Once you understand this thing I just explained, I'm going to put the recording out, okay? Watch the recording whenever you're dizzy, whenever market becomes scary. Because once you understand this point, you see the area of interest here. Remember what I told you about point of interest?
Yeah.
Is either a point of interest or an area of interest. You see the liquidity being clearing out here, right?
Yeah.
And that was the same thing I pointed out here. Price clear liquidity, change of character. So if this is the internal structure, then this is bound to happen on the next range. This is going to happen here. So let me copy this. So can you see it?
Yeah.
So that means the change of character is going to be here. And then this will be the external structure you're supposed to pay attention to. Do you understand? So this thing, this you just saw on the higher time frame, this you just saw on the bigger structure, which is just this, is also going on the lower time frame of this.
Okay.
So once you can find the change of character and the break of structure, you're good to go. That is what you're looking for. This is what you're looking for. This can give you every other thing. So the model is price clearing out internal structure liquidity and then a change of character. So you can get an entry here. Or it's clearing out a change of character here or an entry here, right? So this key level, which is this point, and this key level becomes significant levels on multiple time frames. It's the same thing that will be happening on this point too, which would be the key level for an entry as well. So you see, it's always at the swing point. Remember, swing point, swing point. So when you're looking at structure, you're paying attention to the swing point here, the swing point here, this swing point. You're trying to look for swing areas. Once you see the swing point, you want to understand the structure. What is this? Price clear that internal structure within this range. Can you hear me? Can you hear me?
I hear you.
Okay, let me clear out this.
Yeah, I do hear you.
Hold on, let me clear out all this. Let me formally tell you when I go to the chart so you don't get confused. But what I just explained to you on the diagram, can you understand that? I'm using the most simplest way to explain market structure to you because that's what you're trying to predict.
Yeah.
Once you can understand this, again, there is a community. You remember the community group chat? What you do there is to use those charts and compare to what you understand. Anyone that makes sense, you don't have to do much research anymore. If it's understandable, if the person you're looking at is identifying the key levels as you're being taught here, you can say, okay, this person knows what they are doing. These key levels and market structure is all that it takes to understand what is going on. Do you understand? That is using smart money concept. This is when you're using smart money concept. And that is what I taught you. Do you understand? Any other concept you want to use that is based on what you think you're doing is none of my business. You understand? But for me, I'm going to teach you how you can use smart money concept. It's going to be easier for you if you try to use smart money concept too, so that you can basically understand what's going on here. So I'm going to explain what's going on here. Then I'll come back to making sure you're following up. Okay? Can you hear me?
Mm.
Now, what I'm
Yeah,
going
I
to
hear
show
you.
you, you might wonder, why am I not trading this on my own account right now? If I can predict this, why am I not placing that particular trade on my account? Let me explain that aspect to you. Currently, the time is 8:12. This is 8:12 p.m. Nigerian time. And the market is very, very slow. But that doesn't stop this market from mitigating this area of interest right now, right?
Yeah.
That doesn't mean I'm going to open my account and place a trade because this is already Asian section my time. I can do that though. Do you understand? I might already be in a trade. You don't know. You understand? But what I'm trying to explain to you is how you can understand what's going on too, so that you yourself can be able to, do this on your own time. Do you understand?
Yeah.
Now, when you look at this structure, I'm identifying what is being mitigated. That is what price is tapping into. This order block was first created. Price went up, came back down, mitigate the same order block, created a new one, which makes this our what? Area of interest. Okay? Then price goes
Yeah.
up over here, previous swing high, right? And then we have a change of character here. That is from this range. At the same time, this range here, we need to identify the swing points within them so we can point out the liquidity. Okay, so you can know the liquidity that is being cleared. That this is internal swing low. This is also an internal swing low. And price is clearing that out, which means price was clearing out liquidity. Okay, so if this is the structure of what's going on here, then this is also price clearing out internal liquidity. That is from this range here, before this spike up to the upside. If this is what's going on here, then price has to be bullish from here. So we can be expecting more bullish price action from what I just explained to you. Do you understand? That is on this time frame. This is just looking at it from the 1 hour time frame. This is the 1 hour time frame. And as you can see, if you pay attention to this, based on the pattern I showed you, earlier, you can see this. You can see this, right?
Yeah.
Now, look at these points. This is the demand zone that got mitigated.
Yeah.
This is price clearing out the internal structure liquidity, like I showed you earlier.
Okay.
This is the change of character. And this is the new demand zone that price created. But price did not touch into it officially, fully, right? Then created a new one here, and then used that one
Yeah.
instead. So the key level here would be this point. Because it's from the previous range into this range, this was a key level. The next key level would be this point. We can have separate classes where I talk about just key levels. I think there are multiple videos on YouTube. Do you understand? On our YouTube channel.
Yeah.
In the future, if you check the price action, price is going to react to these key levels here. As you can see, price is reacting from this demand zone instead. That is what is going on within this market structure now. All you're trying to do is to just find the internal structure and the external structure. Now, normally, for you to not get confused, you can easily identify everything going on. But for you to not get confused, I prefer top-down analysis. That is coming from the higher time frame. So you can identify major things because everything I'm breaking down here, if you go to the 4-hour time frame, everything I'm breaking down here, if you go to the 4-hour time frame, you will find that those are significant areas too. Can you see?
Yeah.
So this one is already being mitigated. This one is what is going on within the internal structure. That's what's going on within the internal structure here. That means we were on the lower time frame, and that was on the 1-hour time frame. We were looking at what was going on here. All those price action was just the internal structure of this point. This is the swing structure. This is something you need to pay attention to. If price is playing out this, right? Everything below this is liquidity. Understand this. If price is doing this, it's going to clear out all these things. Do you understand? That's why I say come start from the higher time frame so you can
Yeah.
understand major things. And do you know why I say it's going to clear out all these things? Because if you pay attention to the higher time frame here, which low here? We have multiple low. We have this low, right? We have this low. Okay. Do you understand? We have this low too. So if we're paying attention to this market structure now, price clear the liquidity of these points, right? Let me wide this. Let me wide this a little bit. Hopefully you can see my screen. Price mitigated this area. Do you understand? Then we had a break of structure here. Are you following up? That was the same thing I was
Yeah.
here. These are the same things I was showing you here on the 1-hour time frame. Do you remember? It's the same thing I was showing you on the 1-hour time frame. That's the same thing I'm showing you here. We are doing the same thing on multiple time frames. Do you understand? Once you get this,
Yeah.
all you are looking for is just price clearing out structure and paying attention to key levels. Once you have identified all these things, I just showed you all these things. I'm going to delete everything now. So we're going to start afresh. Now, would you have thought of this price action as bullish or bearish? Looking at it just like this.
Yeah.
Will you say this is bullish or this is bearish?
Bullish.
Okay, that's very easy. You can see it's bullish. But at the same time, is market within premium or discount?
From where?
From where it is right now, that is here. Are we within premium or discount?
We are to the. We are to the
Premium. We are within premium. This is premium. Because
premium to the 4-hour frame. Yes.
yes, on the 4-hour time frame, this is premium because this will be a break of structure here.
Yeah.
That is the swing structure. That is looking at this.
Yeah.
Okay. So we're expecting
Yeah.
price to retrace into discount. That's what we're looking at now.
Yeah.
So price action is bullish, but we are within a bearish area of interest. We don't have any point of
Yeah.
interest yet. We are within a bearish area of interest. You can easily use
Yeah.
the Fibonacci ratio to find the key levels. If you're looking for the key levels, wait, let me flip it. The Fibonacci ratios, you can use the Fibonacci ratio to find the key level within this range. Do you understand? That is all the
Yeah.
key levels within the discount area of this range. So you can mark, if you mark them out like this now, this is the 61.8 Fibonacci level. That is saying that is a key level, like what I told you about key levels. This is its 78 Fibonacci level. That's also a key level. It has been mitigated already. And then this is the 50% Fibonacci level. It has not been mitigated. Do you understand? This one has been mitigated
Oh,
already. This one has been mitigated, but this one has not been
oh,
mitigated.
okay. So, for example, you are not drawing this premium when discount, and you need to display the Fibonacci ratio. How can you put it in here,
You
for
have
instance?
is how you set it on is how you set it on your trading view. It's based on how you set it on
Yeah.
your trading view. Because if you copy the settings here, and there are multiple videos online that you can use to learn this, or you understand how to place this. But if you go to your Fibonacci ratio, if you search for it on trading view on your system, and you go to settings,
Okay.
so let me tap this
Okay.
Fibonacci ratio, you go to settings, this will pop up.
Okay.
So you can see my own figures. Let me zoom in so you can properly see it. Later, when I post the recording, I'll post the recording this night or tomorrow. Okay.
Okay.
I will take a screenshot now so I can send it to you also.
Okay.
You can use it to set your own. Do you understand?
Yeah.
So you go to trading view, you go to the settings, then you use the figures to set your own. So you can have,
The free trading view contain these features.
yes, I'm using free trading view.
Okay, will taught me how to use it because I think maybe because it is free, that's why you cannot contain. Okay, proceed.
Okay, okay. Well, it's free. The way I'm using it, you can use it too. It's just I'm not subscribed to anything yet, so as long as you're using a system, it's supposed to be this easy too for you. Or again, don't forget I have a lot of experience, so some of the things I'm using, I'm very casual with it. This could be your first time.
Absolutely. Uh,
So why I say this has mitigated, as you can see here, if we point out this key level, why this is a key level here, we can also see this point after this internal break of structure that happened here. Let me take out this premium and discount, stuff. Okay. So if you look at this demand zone here has mitigated, right? And then price broke this structure here. That is this internal change of character before the external structure got broken. So price retraced
yeah,
here. This was a retracement. And this retracement
yeah,
is what the 61 Fibonacci ratio is showing us as it has been mitigated. That is this point,
yeah.
mitigation of this point. So this retracement is the major internal structure retracement before this swing break of structure. That is this one
Mm,
here. And this range now being from this low to this high, or let's say this high, which is the major high for now. Let's measure the Fibonacci level within that and see if, this level as a major level here, which is this 50 Fibonacci level, is still open, which is valid. Let's see if it's still valid as an open POI. This is how I use Fibonacci ratio too. So basically, is just how you prefer to use it. I use them on key levels. I'm just identifying the key levels on charts using smart money concept. Do you understand? And as you can see here, this same area happens to be the 78 Fibonacci level of this range and is open. You see, and the 61 Fibonacci level here, which is this point, is showing us this retracement here. Before this is showing us by the 50% before we have this. So basically, all this within this area, we can see them as um, retracement of the internal structure from this point to this point. So when price broke this structure, price made this retracement. That's not the swing. That is not the swing retracement. That is the internal retracement, right?
internal.
And then
Yeah.
price did this. So this is a stop hunt. This is not a major break of structure. So price created a stop hunt here. Okay.
Okay.
And then
Yeah.
we don't have a major change of character yet, but this will be considered as liquidity.
Oh, for the retracement that cannot reach to the order block, so you consider as a liquidity.
No, the retracements are internal structure. Right?
Exactly.
If this is bullish, then it has to go up. There's no need for it to go back down
Yeah.
because it has already mitigated what is meant to be mitigated here, like this. Do you understand? And this
And
mitigated it. That was what I showed you earlier before I deleted everything. Remember?
I do remember. Yeah.
So we now use the Fibonacci approach. We went back and used the Fibonacci approach to try and see the same thing. Do you understand? This is using smart money
Yeah.
concept. That's why I say, remember that pattern I showed you in the beginning. That is all you need. You can come from any approach, Fibonacci, anything. But as long as you're using the internal structure, remember the swing structure, you're breaking down the internal structure. All we are looking for is what? This area of interest. This is our area of interest for now. I'm going to identify all this because this was not a proper retracement here. So we have this as an open POI for now. This is still the area of interest, okay? And we can still do something like this,
Yeah.
you know? But I don't trust it like this because why I say it's an area of interest because a stop count can happen to this low and price still go bullish. That can happen. You understand? But this here, this will be the liquidity of this swing area. And as you can see, this is the POI we said got mitigated here, right? If price is doing any retracements, we're talking about into proper discount level. We have price to clear out this as liquidity. So maybe we are expecting a stop hunt here. And then we'll find something like a change of character. Same thing that happened here, we'll repeat it over here. Or price is supposed to continue from here. So this is our two area of interest.
Okay.
So for now, price is bearish. It's a bullish trend,
Very,
but price is bearish. This is our area of interest. This will be our area of interest. Okay.
okay.
This will be liquidity. This will be liquidity. This would also be considered liquidity. Okay. And we're expecting this.
Okay, please, before proceeding,
I think the Zoom is about to
sorry.
end. I think the Zoom is about to end. We'll end this recording and then
Okay.
maybe you can join in on the other one, but I'll only post this one instead, okay? Then you can ask your question on the other
For
one.
okay. Okay.